Hey everyone, today is October the 12th, 2014, and I wanted to do a quick video as before we get into the trading week here. And it's been a very interesting trading week to say the least. You can see here I've got the S&P on a daily chart currently, and you can see the last week or so we've seen a lot of fluctuations, but the last 2 days specifically we've seen some sort of hard selling into this support area right here. Now you can see it's just starting to kind of pierce that area, retest that area. So that's obviously going to be an area where we're going to be watching very carefully the next few days to see if it starts to move beyond it. Now, bigger picture, I actually think that this market is probably going to start retracing with a bit of significance. And the biggest reason I say that is really just due to looking at a long-term trend line. So if you take a look at a trend line that starts, sometime last year, you could even go as far back as May of last year, this market has sort of been hugging that trend line. Not so well right here, but we do that again and we start right around a year ago, and you can see this market's been hugging that trend line very, very well, and it's kind of been doing it all along 2012 too. So for the last year to 2 years, this market's been making sort of this 2 steps forward, 1 step back, right? 2 steps forward, 1 step back, 2 steps forward, higher highs, higher lows. And for the first time, really, we're seeing a significant break of that right below here. So even if we do get a retracement, it's going to be, interesting to see what happens at this area. But, I've been saying, I think for the past couple of months now, that I was going to be very cautious at these levels because from the bigger perspective, my opinion was that we were going to start to see, we would likely at least start to see some major selling. Just because, again, you look back at this monthly chart, and for the most part, for the last 2 or 3 years, we haven't done anything but go up. I mean, down moves have happened very, very little. The most significant one really is 2011. I mean, so it's been quite some time. The question's going to be, where do we see this market going from here? What's this thing going to do in the coming months if we do see some selling? And I'm being cautious here, but I'm watching. I'm going to use my fib levels to kind of just draw from the last swing low to the most recent high. Now, I'm not saying that we're going to make this massive drop, but I would start looking from a bigger perspective to see how far this can come. At the very minimum, I don't think it would be surprising if we see a move down to this 382. Now, if a year or whatever, however long it takes, if this market comes down into this level, this is very long term, by the way, I would be a buyer here. But for the time being, I'm being very cautious, and I think there are a lot of good shorting opportunities. Let me just point to one real quick. So here I've got a chart of Google, a market that I've traded quite often, and I like trading Google a lot. And you can see this is sort of the classic, double top. You can see it retested the highs, lots of sort of indecisive candles here. Now we're seeing some selling. So one of the trades that we did earlier last week was an options trade, believe it or not, where we sold, where we bought like a 520 put for December. And within just a few days, it just started to drop. Bought it right around here, started to see some dropping. At the very minimum, I expect Google to retest this area, so right around 520. So if you get any shorting opportunities, you can look for that. If you don't see a reason to short it now, based on your rules, then don't short it. What you can do is use what you know here or what you see here and apply it to maybe an hourly chart or a 2-hour chart and see if an opportunity arises. So for example, I'm looking at a 1-hour chart right now of Google, right? And you can see from this area right here, right? This thing has been making lower lows, lower highs, right? Lower low. So for example, if I take a look at this most recent leg here, right? This move from about 584 to 553, which is about a $30 move, right? I can take my fib again and I go from the swing high down to that swing low, right? Let me get rid of the 382 because we don't need that. And I would just look between the 50 and 618 and look at that. if Google manages to retrace right into 570, roughly, right? Between 570 and 573, there's some previous structure support which we'd anticipate to be resistant. So this is an example here where my reasonable expectation is that Google's going to head down to around 520. Let's say I don't have a trade or I miss this trade or whatever. You start drilling down and you look at smaller time frames, and here we are with an hourly. So on Monday or Tuesday or whenever, sometime, if we see a rally back into this area, we're going to sell it. Okay, so that's an example there of taking advantage of looking at a bigger picture and then applying sort of a smaller trade without taking much of that risk. All right, so hope that helps. More to cover in the coming days or weeks. A lot more videos to come. If you're interested in joining our class and doing this on a daily basis for much longer than this video, we've got classes, courses. You can also support Ratio Trading's videos by just pledging a small amount on Patreon. That's on our website, ratiotrading.com. All right, guys, hope that helps, and we'll see you guys next time.